All right, so here we are, Chapter 5, Question 11a. So this question talks about a company called Counterpoint Studios has completed all the entries for the month of November 2019 except monthly adjusting entries, providing 4 different entries that we'll walk through in this question. And as we do so, we need to complete the 6-column worksheet for this organization. So then what I like to do in these situations is just make some notes as far as what the different components are before transferring them to the 6-column worksheet. So the first situation is we have annual depreciation on equipment totaling $9,000. So again, we want to record the amount for 1 month. So we take the amount of $9,000 divided by 12 months, which would give us $750 per month. And this would be considered a depreciation expense and an accumulated depreciation. Okay. And we would have to increase the depreciation expense. We will not have to debit that, and therefore to balance the entry and increase the value of accumulated depreciation on that said equipment, it would be a credit to that account. The second point would be to record interest accrued on the bank loan of $500. In this case, they're telling us the amount for the month, so no extra math required. But we now will have interest payable with a credit, and we will have a debit to interest expense for the said $500. Next entry is we have services performed for $8,100 to be received next month. So again, it's giving us the total, so no calculations. In this case, we need to debit accounts receivable because the customers have not paid us yet. And we need to, credit service revenue for the $8,100. The fourth entry in this situation is the annual insurance policy was purchased on December 1st, 2018 for $21,900. So if that's annual, we have the $21,900 divided by 12 months will give us $1,825 remaining. You'll also notice that because we're on the last month, this is the same as the balance of the prepaid insurance account. Okay, so there are two different ways to actually calculate this component. So in this situation, we need to debit insurance expense and a credit to prepaid insurance for the $1,825. Next page, we'll go through the worksheet. Now that we've determined what the entries are for our 4 entries, we need to flip over to our 6-column worksheet and post those transactions as adjustments to the relative accounts. So in the first situation, we had a $750 debit to depreciation expense, so we'll find our depreciation expense in the debit column, enter 750, and in the accumulated depreciation column, a 750 under the credits. Next entries, we have our interest accrued on the bank loan. In this case, you'll see there's no interest accounts. So what we can do is add our interest payable account and interest expense account at the bottom. Okay, our interest payable would be a credit of $500. Interest expense would be a debit of $500. Third entry is the services, where we debit accounts receivable and credit service revenue for $8,100. Fourth and final entry for this question is a debit to insurance expense and a credit to prepaid insurance. So credit to prepaid insurance, 1825, and insurance expense, 1825. Once you've done this, you want to actually total the debits and credits column for the adjustments that you've posted to make sure that they actually are in balance before you go any further. So in this case, we have 11,175. And again on the credit side. You would then go through each of the rows and process what the calculations are to any adjustments. So in this case, there's no adjustments in cash. Our accounts receivable is increasing, so the debit of 24.8 plus a debit of 8,100 is 32.9. Prepaid insurance had a debit balance of 1825, but then you're reducing that account by 1825, so therefore you'd have to subtract the credit from the debit of a balance of 0. No change to our capital asset of equipment. Our accumulated depreciation did increase to 97.6. No change to AP. Sorry about that, 140. No change to bank loan. No change to capital. No change to withdrawals. Service revenue, we're having a credit balance and we're adding another credit. They're both on the credit side, so therefore the number will get bigger to be 390,600. No change in advertising. No change in salaries. Insurance, we have a debit and another debit, so therefore you're adding them to be 21,900. Depreciation, you have a debit and another debit to add to 9,000. Interest payable had nothing before. Interest expense had nothing before, so it's a matter of just carrying over those adjustments. And then you would add each column to make sure that they are actually in balance at that point in time. If you're not in balance, what you might have done is, if you say you had a debit here and a credit in the adjustment column, maybe you added them by mistake instead of subtracting them. So it's always very important to make sure that like columns get added, opposite columns get subtracted between each two. So the last slide here is just a snapshot on what it should look like when you're all said and done. Okay, so indicating that the worksheet continues to be in balance. And in future problems, we'll actually go through how to record these adjustments as a journal entry in our general ledger. So good luck.